Did you decide to wait until 2023 to buy a home? Well, let's talk about where mortgage rates and home values are going in 2023. And then you can decide if it's a good time for you to get back in the market. Knock knock, Yitzchak here, realtor and success coach, helping you get from where you are to where you want to be. Please give this video a like and subscribe below. So first of all, I can pretty much tell you that the 2%, 3%, and 4% interest rates are not going to happen this year. Nobody is forecasting those interest rates for 2023. At the moment I'm filming this, it's early January 2023 and rates are in the mid sixes. Okay, so let's put that aside and we'll try to be realistic as to what mortgage outlook and what the housing outlook will be for 2023. Let's talk about the different agencies and what they're predicting. We'll start with Freddie Mac. They're predicting mortgage rates anywhere between 6.2 to 6.6%. Now with that forecast, the lower end of the range is predicted for later in the year, like the third or fourth quarter. So that would be August, September timeframe. Zillow is predicting 6.5 to 7.5%. Now that's pretty high, but Redfin is predicting below 6%, so probably high fives. The Mortgage Bankers Association is predicting a 5.4%. So basically on the lower end of that spectrum, we'll be looking at 5.4. Now that's the lowest I've seen, and then the highest that I've seen is 7.5. So you have to be realistic with yourself. If this forecast is accurate, then when would you be back in the market? Are you a buyer at 5.5%? Are you a buyer at 5.25%? When are you a buyer? If these predictions or these forecasts hold true, then you have to start thinking about that now. Because more than likely, on the very positive side, it'll be in the fives. On the other end, they're saying it'll be in the mid sixes. Now, holding interest rates where they are has a lot to do with inflation right now. So the better we are managing inflation, the lower interest rates will be. Inflation numbers come out every month. However, the Federal Reserve does not meet every month. So they're reacting to the inflation numbers, the CPI, which is the Consumer Price Index. So if they feel like inflation is under control, then they'll probably back off on raising the interest rates. If they feel like inflation is not under control, then they're trying to get the inflation down. Let's say the goal is to get inflation down to 2%, and right now it's at about 7% or so. Then if inflation goes well, the interest rates go down. But if inflation doesn't go well and it maintains and it's still high, then you're probably going to see higher interest rates because they're trying to raise prices to reduce some of the demand. Now let's look at some different organizations and their take on home prices. KPMG is a huge accounting and auditing firm, and they're predicting a 20% drop in home prices. And this is based on the average in the United States, but this could vary based on location. Some of those very overheated markets like Austin, Texas, Phoenix, Arizona, Miami, Florida, they may have more of a significant price drop than other areas that didn't get such a huge, fast rise in prices. Now, the National Association of Realtors is predicting that homes will go up in value about 1.2%, and the Mortgage Bankers Association is predicting a 0.7% increase in home prices. So not everybody is saying homes are going down in price. At the extreme, we've seen is 20% drop, but then on the other end of the spectrum, basically what the organizations are saying is home prices are going to be flat. They're not going to rise significantly, and they're not going to have a huge decrease. So there's no rush because home prices should remain at this level, if not drop. So you want to get in when you feel like you can afford it. So with inflation, low supplies, and the potential of a recession, a lot of buyers are thinking, well, we'll just wait and see. But I would say for 2023, just make sure you have a strategy in place to know where your affordability is, at what interest rate, and at what price point are you able to afford a home. I put an affordability at less than 35% of your take-home pay. So you want to know those numbers. So when you do find an opportunity, then you're able to jump on it. In 2023, the market, the interest rates will be higher, but as a buyer, you're going to have a lot of negotiation room, and you're going to be able to ask for price reductions. There will be sellers with higher priced homes, but they need to sell those homes, and it's already been sitting on the market for a while, so you come in a little bit lower in order to make your price point. You can also ask for closing costs to be paid. The seller or you can ask the closing costs to be paid by the seller, or you can have another strategy that still makes the home affordable for you. And if you're planning on living in that house long term, you'll be fine if there is a market dip. It'll go back up later, and over time your property will be fine. So as long as you're thinking long term, you'll be okay. I hope this was helpful. I'm going to put some of those links to the forecast below, and if you have any questions, please put it in the comment section. Please subscribe to my channel for new videos every week.